Hey guys, welcome back. Today we are going to solve another problem which is from relevant costing. 1 minute. Relevant costing in case of material, labor, overheads, and machines also we are including in this problem. Yesterday we discussed three of them. Today we have included this. Okay. So this is kind of comprehensive sum can be asked for 14 marks in CMA final SCM paper, right? Okay, very simple problem only, not much complications inside it. But the thing is we have to take a proper decision of whether we have to choose which cost which is relevant. The choice of choosing the choice of making a decision regarding the relevant cost will make your answer correct. That's it. There is no other thing with no other complexities inside it. So let's slowly read the question. Tip Top Textiles manufactures a wide range of fashion fabrics. The company is considering whether to add up further product Super to the range. Okay, they are planning to introduce a new product which is called Super. Okay, they have done market research survey recently undertaken at a cost of 50,000. Already undertaken. So it's past sunk cost. Okay, don't consider this. This is not a sunk or irrelevant, historic or committed cost. Everything is irrelevant for a decision making purpose. So and that reserve will last for only 1 year, during which they found out that another one thing is the super product can be sold 50,000 in the market, 50,000 units in the market. So they have found that the demand is 50,000. Found out the demand is demand 50,000 units. Okay, and it could be sold at rupees 25 per unit. Okay, and another things, production and sale of Superb would take place evenly throughout the year. The following information is available regarding the cost of manufacturing Superb. They have given the cost of manufacturing Superb. They have given the raw material details first. Each Superb would require three types of raw materials: post, flash, and splash. Okay, quantities required. Current stock levels and the cost of raw materials are shown below. Okay, they have given how many units are required for one to make 1 unit of super. What's the current stock level and the cost per meter of raw material? Cost per meter of raw material. Okay, and they have given the original cost, current replacement, and current resale cost, everything, realizable value, everything given. So these are all given for our decision making purpose only. We have to choose which is our relevant cost, which is irrelevant. That based on that we have to, our answer is going to change, right? Posh is regularly used. Okay, this is the very key line here. Posh is regularly used by the company, and the stocks are replaced as they are used. Okay, so they are regularly used. Okay, okay, then the flash, current stock of flash is overbuying of an earlier contract. So this is not regularly used by Tip Top Textiles. Flash is not regularly used. Flash regularly, not regularly used. Any stock that was sent that was not used to manufacture a super would be sold. Okay, that's realizable value only we have to consider. Does the company does not carry a stock of splash, and the units required to be specifically, they don't have any stock of splash. Okay, three products. Before that what's the rule for material? We have to find what's the rule for material is, what's the not rule, it's kind of logic. Okay, material in stock, material not in stock. If not in stock, our relevant cost would be our purchase price. Purchase price. If it is in stock, regularly used, not regularly used. If it is regularly used, replacement cost is our relevant cost. If not regularly used, realizable value or benefit from alternate use, whichever is lower is our, sorry, whichever is higher, because we are, this is our gain, no, we are going to get a savings out of it. So whichever is huge will be our consideration for relevant cost. Okay, we got the logics ready in the table with the, sorry, with the flow chart. Now we can proceed with the question. Before that, let me make it short. Okay, now what did say, what they said, push flash splash. Push and flashes in stock. In stock, not in stock. What we see other than this, push is regularly used. Flash is not regularly used. Not regularly used. Not in stock. There is no option for this. The direct price is purchase price over relevant cost. Purchase price. Okay, what's the purchase price for splash? Splash purchase price is 5 rupees. Rupees 5. Posh is regularly used, no. So if it is regularly used, what we have to take is, we have to take the replacement cost. What's the replacement cost for Posh? Posh replacement cost is rupees 2.5. What's the relevant cost for flash? Flash in the stock in stock, but not regularly used. So if it is not regularly used, what cost we have to take? We have to take the realizable value or benefit from alternate use. What the question is given is, any stock that was not used to manufacture super was be sold. So there is no use there is no alternate use for the raw material flash. So what we have to consider is realizable value, which is rupees 1.80 is our relevant cost. Okay, yet, and what's the material requirement for this? Material required is 50,000 is our demand, right? 50,000 units of our demand. So Porsche is having 1 lakh units, and one unit required for every one superb unit. Okay, so that's, we have enough stock with us, so no issues. What about the flash? Flash is requiring 2 units. So flash we require 1 lakh units. So 2 into 50,000 units we have a demand. So 1 lakh units is required of 1 lakh units of flash is required for the production of superb. Okay, so 1 lakh units is required. How much units are in stock? Only 60,000 units we have in stock. What about the another 40,000 units which we have to purchase from, not in stock, no, we have to purchase from outside? What's the purchase cost? Which is rupees 2.8, right? Okay, we have to purchase from 2.8, and this is not 1.8, this is 1.1. We mistook the wrong value. Okay, into rupees 1.1. So multiply this, we'll get the relevant cost. This is the relevant cost, and this is what's the requirement of splash units for superb. 0.5 into 1 minute. Let me take a calculator. Okay, 0.5 into 50,000, which is 25,000 units of splash is required for 50,000 50,000 superb units. Okay, So what's the relevant cost that we are going to calculate here? Okay, 2.5 into 50,000, which is how much? 1,25,000 is the relevant cost. 60,000 into 1.1, which is 66,000 is our relevant cost. Then 40,000 into 2.8, which is 1,12,000 is our relevant cost. 5 into 25,000, which is 1,25,000. Okay, what's the total relevant cost in case of material? 1,25,000 plus 66,000 plus 112 plus 125, which is rupees 4,28,000 is the relevant cost, right? Okay, we found out relevant cost in case of material. Next point, relevant cost in case of labor. RC in case of labor. What we have to know when it comes to labor, whether this labor is existing employee or we newly hired. Existing or newly hired. If he is newly hired, what are the wages we are paying to them is the relevant cost. If it is existing, whether they have a spare time, no spare time to do that work. If they have a spare time, our relevant cost would be nil, because we are not going to incur any 1 rupee for the work they are doing for the super product. If there is no spare time, what we have to do is we have to consider if they are paying any additional amount as wages to them, or if we are under for the opportunity lost. No, if they are not working with Superb, they could have occupied with another work, because they have no they doesn't have any spare time, right? So anyways, they're fully occupied, so we are replacing them to Superb. So we have to earn that, we have to get that opportunity cost also from them. So this is also our relevant cost for the case of labor. Now we got the logics ready for labor. Now we'll read the labor part. Production of each super would require a quarter of an hour of skilled labor and 2 hours of unskilled labor. Okay, each super requires. Okay, skilled, unskilled. Okay, how much skilled labor is required for 1 unit? For 1 unit, each super they need 0.25 hours. 0.25 hour, and unskilled labor 2 hours into 50,000 units into 50,000 units. 0.25 into 50,000, which is how much? Rupees 12,500. 2 hours into 50,000, which is 1 lakh. Sorry, 1 lakh hours. 50,000, 12,500 hours. 2 hours into 50 for 2 hours spent every unit of Superb will cost us cost us with the hours of 1 lakh hours. Okay, any other things they have given in the question? In addition, one foreman would be required to devote all his working time for 1 year supervision of the production of Superb. Okay, he is currently paid an annual salary of rupees 1,50,000. Tip Top Textiles is finding. Okay, he is currently paid an annual salary of rupees 1,50,000, right? Okay, dedicatedly he is working, right? Okay, he is currently paid an annual salary of required to devote all his working time for 1 year in supervision of production of Superb. He is currently paid an annual salary of rupees 1,50,000. Okay, supervisor, foreman, sorry, they have termed as foreman. What's the salary we are giving to him? Which is rupees 1,50,000 annual salary, right? Okay, and he needs to supervise the production of Superb, and he is currently paid not dedicatedly hired. He is just existing employee working for the company, and he is going to supervise the production of super products. Okay, now the skilled labors, the textiles is currently finding it very difficult to get the skilled labor. The skilled labor needed to manufacture super would be transformed from another job, where which they are earning a contribution surplus of 4.5 labor hour. Okay, what they are saying is superb employees or existing employees, they don't have spare time, no spare time. Okay, and they are working on a and they are working on a project, they are working on a work which is they are working on a project or some other job, no, there they are earning a contribution surplus. Okay, okay, so what's the contribution surplus they are having? They're having a contribution surplus of rupees 4.5 labor hour. Okay, 4.5 labor hour, and sales revenue is 40, and the skilled labor wages is 30. So we are paying rupees 30 for the job. Okay, and other variable cost 5.5. It should not be possible to employ additional skilled labor during the coming year. So they are it's not possible to hire additional skilled labor, so they don't have any spare time. If they don't have any spare time, what we have said, no spare time, so our relevant cost would be wages plus opportunity cost. Okay, what's the wages here, which is 30 per hour, plus what's the opportunity cost here, which is 4.5 per labor hour. So 34.5 hours into 12,500 hours. 12,500 into 34.5, which is 4 lakh 31,250 is our relevant cost, right? We found out the relevant cost. Okay, we'll go to next part, which is unskilled. Okay, if superb are not manufactured, the company expects to have available 2,000 surplus unskilled labor hours. Okay, they are having a available 2,000 unskilled laborers during the coming year because the company intends to expand in the future. It has decided not to terminate the service of unskilled worker in the foreseeable future. So they don't have any work for work for 2,000 2 lakhs hours of unskilled labors. So they have spare time of 2 lakhs. So if they have a spare time, what's our relevant cost? Our relevant cost become spare time available, so relevant cost will become 0, right? Okay, what else they have given? It has decided not to terminate the services of any unskilled labor in the future. Okay, the foreman is due to retire immediately. The foreman was about to retire immediately on the annual pension payable by the company of rupees 60,000. He has been provided upon the stay for a further year and to defer his pension for 1 year in return for his annual salary. So the company will be paying only 60,000 for his since he has achieved his retirement. But for we have taken a project of super, we have considered him for another 1 year, no, another 1 year of super projects. He has to supervision the entire production year part. So we are paying the opportunity cost of rupees 1,50,000, and also we have pension payable rupees 60,000. What they are telling is, if he has immediately lived, the company would have paid 60,000. So for the case of superb project, the company has retained him with 1,50,000 salary. So what would be our relevant cost? Our relevant cost would be the difference of amount, which is 90,000 will be our relevant cost. Okay, okay. I think the labor part also over. What's the relevant cost in case of labor, which is 4,31,250 plus 90,000, which is rupees 5,21,250 is our relevant cost. Then what they have said about machinery, two machines would be required to manufacture superb, okay, super product, which is MT4 and MT7. Details of machines, each machines are as under follows. Okay, the MT4 is there, MT7 is there. Okay, what's the logics we have to follow for machines? Okay, machine in case relevant costing in case of machines. Machine in possession, machine not in possession. If we don't have machine, either we have to rent out or we have to purchase. If it is purchase, we will be having a resale value. So net buying cost will be our should be our relevant cost. Okay, purchase price minus resale value. Since this is a cost, we are going to consider whichever is lower will be our relevant cost, right? Okay, if it is in possession, what you have to consider, two things we have to think: whether regularly used or not regularly used. If not regularly used, no. What's the fall in realizable value is our relevant cost. If it is regularly used, what's the fall in replacement cost is our relevant cost. Okay, yes, we have written the logics for the machine part. Now we have to apply this with the problem, right? Okay, what they have said here, straight line depreciation has been charged on each machine for each year of its life not required. Tip Top Textiles own a number of MT4 machines. Okay, they have a number of and regularly used. See, MT4 machines they have, and they have regularly used for various products. Each MT4 is replaced as soon as it reaches the end of its useful life. And the MT machines, okay, MT machine 4 machines stories I can see here. Okay, what they have said is they are having a machine in possession. They are regularly used. If it is regularly used, what we have to do? We have to see the fall in replacement cost. How much it has been fall? 15,000 is our relevant cost. Okay, what about MT7 machines are no longer used, and one which would be used for Superb is the only one the company now has. If it were used to produce, so MT machines are no longer used. They have machines but they are not using it. Okay, if it not used to produce, now it would be they'll be selling it immediately. So what's the relevant cost for us? So realizable value, which is 3,000. So what's the relevant cost in case of machines, which is 18,000. Okay, overheads. Next part is overheads. A predetermined rate of recovery for overheads is in operation. Okay, and the fixed overheads are recovered fully from the regular production. Okay, at 3 rupees 3.5 per labor hour. Okay, this is a fixed cost. Fixed overheads. Fixed overheads are irrelevant for our decision making. So we have to consider only the variable overhead cost for super estimated at 1.2 per unit produced. Okay, if it is 1.2 means 50,000 into 1.2, which is 60,000 rupees is our relevant cost in case of overheads. Okay, for decision making, incremental costs based on relevant costs, opportunity costs are usually computed. You are required to compute such a cost sheet for super with all details of material, labor, overhead, etc., substantiating the figures with necessary explanations. We have given explanations while solving the problem itself. So what we have to do is we are going to prepare a cost sheet comprising all this. Okay, cost sheet. What's the material relevant cost, which is 4,28,000. What's the relevant cost in case of labor? 5,21,250. What's the relevant cost in case of machine? 18,000. What's the relevant cost in case of overheads, which is 60,000. Okay, what's the total cost? Total cost is 10,27,250. Okay, all right. Then what's the actual project return we are having? 50,000 into 25 per unit. Okay, we are getting the 50,025, which is 12 lakh 50,000 we are getting as a project return. So what would be our net profit out of this super product, which is 2,22,750. So this is it, very simple problem, but the thing is we have to remember these logics alone. That's it, we are into with the problem. Okay, thanks. So tomorrow we'll see another problem. Thank you.